Eric Mother, Mother.com, with the weekend market analysis for May 6th and 7th, 2023. Let's take a look at markets here with about, let's call it 5 minutes to go before the end of the session, end of the week. And we can see here we have a nice gain on this Friday after what was a mostly down week. And if we take a look at the cryptos, we can see Ethereum is having a nice day, up about 6%, and BTC is also positive for the day, up about 2.4%. For the entire week, we can see, surprisingly, the NASDAQ is trying to hold on, or at least about 50 minutes ago was slightly positive for the week. And we can see the cryptos also have a positive gain. The NASDAQ and the Dow have been down, but bouncing off the lows of the week. So not a bad close by the end of the week. Let's begin with the NASDAQ weekly, as we've been doing the last couple of weeks. And we can see here that it is now trying to follow through on last week's breakout. So if it closes positive, or even let's say if it closes above May's weekly closing high, this is still a breakout level for the NASDAQ. And let me give you that level. That's 12,221.91. which goes back to this weekly close right there. And remember, we are still above the prior breakout, which is the prior weekly closing high from January. So if you take all of those into consideration, we are still looking at a market that is still showing good stability, and even right now doing its best to break out. So 12,606.95 is the prior weekly closing high from January. Now we've been trying to break this level, but for now the market has held. So over the last 1, 2, 3, 4, 5 weeks, we've tested the prior breakout, which is this number here for the NASDAQ, and we've held. That's good. And depending on how we close, this could be a follow through week for the NASDAQ. Now keep in mind, the level we've been watching in terms of the RSI for potential resistance is right here, and we have yet to clear this level. Keep in mind, this is where we broke down coming off the highs here in late 2021 and turned into resistance somewhere here early 2023, and over the last couple of weeks we've been banging heads here. So if you're going to move higher in terms of the market performance here, we would need to see the NASDAQ clear this range, clear this price, stay above this price. We would need to see the RSI move above this level. Now at some point during the week, we were trading with the market down below the both breakout levels, and the RSI was pointing down. And so it looked like we were starting to see a failed breakout and a market situation that was pointing the market lower, but we can see we've recovered by the end of the week, which is positive for bulls. Take a look at the weekly here. One thing I want to point out here is if you are watching the RSI on the daily, you could have seen that it was coming back to a potential support zone. If you take the lows and just draw a simple line as such. And again, we had a big drop on Thursday as we dropped below RSI 50, and Friday we are seeing this big up day. Why? Because the market is moving the RSI above 50. Also, just from a price outlook, we can see here we held an upward sloping 50-day moving average. We didn't even touch the 50-day moving average on Thursday's big drop, and we are seeing this market now attacking the prior daily closing high from January. So we can see another breakout attempt. The previous breakout attempts in the last couple of weeks have not been very fruitful. We had a failed breakout attempts here on these days, failed breakout attempts last week, and now we are trading above the prior weekly closing high. Let me give you that number. It's 12,000, so 12,280.82, which is the daily closing high from January. As long as we are above this number, this is a market that is forcing institutions to play the market from the long side. Now, one thing I can mention here is there's a topside resistance line that could come in play as we go into the new week. Just a simple line connecting the tops here could come in play, and we can draw the line again. So there's this topside line on the daily for the NASDAQ, and then we have the bottom side there's the bell for the week and for the day, the close for the market for May 5th, 2023. So we can see that on the other side we have RSI lows is supporting the market, hence this recovery on this Friday's trade. So we can also see something similar to this if we take a look at the hourly chart for the NASDAQ. So again, coming off the highs, we can see that this is where the market hit at the highs of Friday's session on the hourly, and you can see a little bit of a pullback, not by much, but still a little bit of a respect of the line. So if you're going to go higher in the beginning part of the week, we would have to clear that level. Otherwise, we might start the week with a little bit of a pullback if this resistance on the hourly for the NASDAQ is to hold. Now keep in mind, if we go back and check how the market has closed, so we are closing here with about 8 points higher for the week. So the NASDAQ is showing technically, if these numbers hold, that the breakout from last week has now seen an official follow-through week. So this is a good follow-through situation for the market from a technical standpoint. That's exactly what the bulls wanted to see, a follow-through week. So net, we are looking at a market that continues to be sideways to higher, as we've been discussing over a couple of weeks now. Dow daily also bounced off the 200-day moving average, now back above the 50. Net, that's a positive support for the bulls. Also, you can use the RSI on the daily for the Dow and see where we found this support here with uniform activity back above 50 for this support zone, and again here back above 50 for a recovery move on Friday. Thursday we had a big drop as the Dow and the major averages dropped their RSI below 50. So what we're doing is just the exact opposite situation with Friday's big up move. S&P 500 closed down for the week, with the market now closed down about 0.08, and we can see again from this break here in early 2022, this has been where the market has been struggling, and we've been tracking this level. And so until we clear this level here, S&P 500 as we end the week here is now looking to be sideways. I would say sideways. It's not broken in my opinion, just based on the other things we've talked about for the NASDAQ and the Dow. But until we can clear this resistance line in terms of the weekly chart, this market could be sideways to lower. Now keep in mind, we really haven't broken down necessarily, because if you take the prior weekly closing high from the month of January, and let me give you that number, it's 136.2.48. So we closed a little bit below that, so closing at about 4136.27, so 20 cents or so below the breakout level. So is this a failed breakout? I would say we are still sitting around the breakout level, and if we can hold above this level in the coming week and weeks ahead, then the market could still be in a sideways to higher trend. But net, keep in mind, we are holding above the moving averages in terms of the weekly charts, the 13 and the 34-week moving average, and in terms of the daily, we are holding above the 50 and the 200-day moving average. So we can say net, institutions are being forced to play the market with an expectation that the market moves higher. As long as the S&P 500, the Dow, and the NASDAQ have their monthly charts above 50, this is still a sideways to higher market. Taking a look at the VIX weekly, we can see by the end of the week, the VIX has lost most of the gains for the week. Not a positive development for those who are bearish. And on the daily, we can see that net, this is rejection at the 50-day moving average. You can also use the RSI. If you take the prior tops, draw it like that, you can see resistance. Reason being that it is resistance based on this line. And remember, I'm drawing through this area here because this was a trap zone. Anyway, you can also get at the same conclusion, which is if you're using the RSI the way I use it, you could have seen this during the week. Simple line connecting prior lows of the RSI. These lows here. All of these lows make a nice line. We get a break, which is right here, which was again confirmed as resistance. You get a big down day, about 14% down, as the RSI drops below 50 on the daily for the VIX. So big down day. So net, we can say that as long as the VIX is trading below its 50-day moving average, the general market should be sideways to higher. Taking a look at the banking, regional banks ETF, KRE, we can see that over the last couple of weeks, the RSI has remained below 30.9, and as long as the weekly is below 30.9, net, there's an opportunity here for lower prices. Again, as long as the RSI on the weekly is below 30.9, this is an area of the market that should continue seeing sideways to lower prices. Now keep in mind, if you take a look at the long-term monthly chart, one thing we've been observing here, or I have been pointing out, is month to month. This might take many months to play out, but where you look for support is on this line right here. Simple line going back to the lows of late 09, which is here. We tagged it here in late 2011. We tagged it here in early 2020. And you can see we're in that potential range for support. Now, month to month, if the KRE can hold above this level, then the next major direction over many months is higher for the KRE. And we also know that if this level does not hold, then the next major trend or continuation of the recent trend is to the downside. Keep in mind, on the daily, there's some early signs of hope in the short term because we made lower lows with an improving RSI. That could set the stage for short-term lows with the anticipation of prices being sideways to higher in the coming days, as long as this positive divergence line continues to be respected by the market. But again, don't expect it to have a rebound momentum until the RSI on the weekly moves out of this 30.9 trap zone. Taking a look at the XLF, we can use the following number, which is the prior monthly closing low from March. That's the number I would watch, and it is 32.15. So 32.15, if we are below this price, that would be breaking down to fresh monthly lows. But if we are holding above that price, which we close slightly above it, then the financials are not in a mood to go down. Keep in mind also, the other equation, the other part of this is RSI is back below 50. That opens the door for a big down month if it doesn't recover back above 50. Keep in mind, to keep it simple, I would watch this number. Anything below this number on the XLF would suggest that the financial are still in trouble and could be seeing lower prices. If they hold above that number, then things are stabilizing and we could see a trend to the upside. Keep in mind, on the daily, if you go back to where we come off the lows of this year, so there's a trend line here, a little bit of a wedge formation. We move above this level here, take this level and draw a line as such, and you can see that we've found support exactly where you'd expect support to come. In fact, if you backtest this line, go backwards here, you'll see that it gives you the timing lows here of October lows of 2022, was support here again in December. We stay below it. So I hope this is making sense. We stay below it in this phase for this down leg, and then we've been above it ever since. And as I said, Friday, we are holding above this level. So I would say on a daily chart, the XLF is finding support where it needs to. And so I don't see it going down day to day based on this daily chart. Nifty, on the weekly, we can see this break point on the RSI, and we can use my uniformity concepts. It's coming off the highs there. We can use my uniformity concept by drawing a horizontal line, and we get the following area for potential resistance week to week, something to watch, which might explain coming off the highs of this past week. In other words, if the bulls are going to see the market move higher, they would need to clear this level. Otherwise, this level could become where we stall in the short term. Taking a look at BankNifty on the weekly, we can see it is also playing out based on the uniformity concept. Again, we break below this level, coming off the highs there, use that information, and down the road you can see again this past week we turned negative based on that resistance. If we're going to go higher, we would have to clear this level. Otherwise, week to week, the Bank Nifty is also showing signs of a pullback if that resistance on the weekly RSI continues to hold. On the monthly for the Bank Nifty also, the Bank Nifty is showing signs of a struggle here if you consider the breakout level. And so as long as that breakout on the monthly chart is struggling, so we can see 43,321 is the level to watch, which is a prior weekly closing high going back to late 2022. Anything below this price is showing a failed breakout, and we know that failed breakouts are notorious for taking markets lower. That's one way of looking at it. We would need to clear and move above this price. We can also take a look at the top side resistance line on the monthly. This is the monthly chart, and we can see that the monthly chart is aware of the top side resistance line, and as long as this is the case and we are seeing resistance here month to month, we are looking at a situation that could be bending the Nifty lower. To correct this, price has to break out successfully above 43,321. RSI has to break out on a monthly above the top side on the monthly RSI. So net sideways to lower is the indication here for the Nifty based on the numbers we have for early May 2023. As far as GLD on the weekly, this is the monthly, and the weekly is concerned, I've been talking about for many weeks why I am not as excited for the prospects of gold going higher. That still remains my outlook. On the daily now, after today's move, we can see we take the prior daily closing high here from April. We can see that there's some sort of a failed breakout, and that should be a concern for gold bulls because, as we know, failed breakouts tend to get people out of trade. So we can see here 189.72. In other words, the daily closing high from the month of April here. So we are below that price. Keep in mind also we had this improvement day to day in price. We have a declining RSI strength. Don't forget that this resistance on the RSI is coming around RSI 61.8, which according to my work is the strongest type of negative divergence. So my opinion continues to be the same, that yes, gold has been having this uptrend, but I don't think this is a lasting situation where it goes higher. I think ultimately I still hold the view that gold rolls over and fails in the weeks and months ahead. USO crude oil was down big this week, but remember, if we take this range here, we are still within that box. So we've been a choppy market going all the way back to middle of 2022. And so we're in the lower part of this range, but still within that range. So a lot of action, but really not out of that range. And if you take a look at the monthly, I would say as long as the USO is below 50, this continues to be a big down month and should be net a big down month by the end of the month if the RSI continues holding below 50. And given that, if we take a look again at the daily, and we've seen this already, daily charts are doing their best to hold. Here we can see we are bouncing off the 30.9 level with uniform activity. We are also using this as a level, for example, coming off the lows here. Take that line and draw a uniformity support line. Again, we are bouncing on this line with uniform activity. Now, having said all that, yes, the monthly is still bearish, but it's not the worst. But net, we've been stuck in this range is my point. We've been stuck in this range for a while, and we are back within that range. So it's really hard to tell where this one is going. I would say it's still range bound, net with no momentum to go high in the short term. Why? Because we are trading below a declining 50 and a now declining 200-day moving average. So I would say crude oil net sideways to lower, but not broken or not really a fresh sell signal. We are still stuck in this range, and I would say that is true for the XLE. It should be sideways based on this movement over the last couple of months. Nothing new, still within this box. XLE down for the week about, let's call it 5 to 6%, because the RSI drop below 50 introduces a big number to the downside. But remember, on the monthly, I would still anticipate that as long as we are holding above the monthly breakout line from many months ago, so it's the following line, this line here, as long as we are still above this line month to month, I would say XLE is still sideways, or maybe even if it can hold this line, it could be sideways to high in the months ahead. In other words, what I'm saying, if this holds month to month, we could be sideways here with an opportunity of breaking out down the road, or this time round we fail to hold above this line. Breaking this line should give a stronger sustained move to the downside. So we are on the line. We really can jump into conclusions. It could be just a pullback within this range where it has been trading for 2023. And now BTC and the cryptos. Now remember, I've been talking about for over the last couple of weeks that as long as we hold this RSI lows line for BTC, then we should be sideways to higher. Keep in mind, net we are still trading above the moving averages. It's another indication that market is favoring the upside. Now we would anticipate and we would need to watch the recent weekly closing high at 30,000. Let me check here, 30,322-ish, depending on what exchange. It's the weekly closing high from this year. So a breakout above this level is what the bulls want to see, and a breakout, of course, should bring more momentum to the upside if it happens. And week to week, if we end up breaking this line, if we break this line here for BTC, anticipate a stronger correction in the short term. Now the same thing can also be said for Ethereum, and depending on how you want to look at it, we can use the concept that I showed with XLE. It's this simple line here on the weekly for Ethereum. As long as this line is holding above this line here, which was the recent breakout, as long as that line is holding, we can anticipate that Ethereum on a weekly basis is also looking to be sideways to higher with a breakout level on a weekly chart here. If it can clear 2023's weekly closing high, that's just going to add on to the momentum to the upside. And let me give you that number for Ethereum on a weekly. It's at about 2120 based on whatever exchange. It's going to be the weekly closing high for 2023. So that's one way of looking at it from the RSI perspective. We can also look at it from another point of view, which is just to draw a line connecting recent RSI lows as such. And again, we bounced exactly on the line, so momentum continues to favor Ethereum to be sideways to higher. At some point, should we see a visual confirmation of a break of this line, then we would have to anticipate a stronger pullback. I would say right now, net things are favoring a sideways to higher crypto market, especially if they break out above 2023's weekly closing high. In conclusion, for the cryptos, this is the crypto BTC monthly. As long as BTC is positive for the month, anticipate the momentum to be sideways to higher. Same thing for Ethereum. As long as it is positive for the month, anticipate the momentum to be sideways to higher. That's it for this week. I am Eric with Mother.com. I leave you as I found you. In the love light of the one infinite creator, go forth rejoicing in the power and in the peace of the one creator, Adonai.